share my screen, but I don't
Welcome to
think
the
it's.
Reverse Mortgage Podcast. I'm Bill Gross, your host at Bill Gross Probate on social media. And one of the key ways reverse mortgages are not used enough, the reason I launched this podcast is I believe that really customers only use it about 1/10 the time they should. And real estate agents, take notes, get your pens out here. Loan officers, if you're doing reverse mortgages, we're going to talk to somebody who's an expert in how to use reverse mortgage for purchases. We're excited to have a company that does a lot of purchase business. Tim Kennedy from Move Home Mortgage. Tim, how you doing?
Hey, good afternoon. Hey, Bill, thanks for having me. I appreciate the time.
And I know that, I talk to, like you, originators who are focused in the reverse mortgage space, experts in the reverse mortgage space. They all seem to have a different focus. Now, some are more evangelical about the product. Some are focused more in estate planning. Some are focused more in other areas. I know when we spoke to you the first time when I met you, that you're really focused on using this as a tool for people who are buying houses, that they should be using reverse mortgage. In my experience, so many people buy properties for cash that at a minimum, if you're 62 years or older, why not get the reverse line of credit or pull the money out and invest it somewhere else? But let's talk about reverse mortgages for purchases. So Tim, where do you see the bigger opportunity that people are missing that you talk to and help them take advantage of?
Yeah, so the reverse for purchase is a unique product, and listen, we've done a terrible job promoting it, and the idea now is what we're trying to do is educate more and more realtors on the benefit of the reverse mortgage as a purchase product, like one-time close with the reverse mortgage. And the premise behind it is number one, we can help realtors increase their listings, increase their sales, and increase their buyer's purchase power. On the flip side, we can help homeowners over the age of 62 find the homes that satisfy their wants and needs without the obligation of a principal and interest payment.
So you talk about a couple of things, getting more sales, buyers being able to get money for a house, and I forget the third one I was listening to. I started thinking about the money I'm going
Oh,
to.
increase the buyer's purchase power.
Okay, so let's talk about that. Let's first talk about, because if you're a real estate agent, you pay attention to this, you can sell more houses. How does reverse mortgage increase the buyer's purchase power when they're buying a property?
Well, you have to remember now, right? They're over the age of 62. In most scenarios, they're already on a fixed income, and they may not necessarily qualify for a traditional forward mortgage, an FHA loan or a conventional loan. With the reverse mortgage, it's not a strict debt to income ratio or a strict FICO score. It's a financial assessment. So all they need to do is qualify, and then they would qualify for a certain percentage of the equity in that home that we would use to purchase that home with the reverse mortgage.
Now, commonly, somebody who's 62, 65, they're going to get about 30, 40% loan to value.
Yeah, so the way the reverse mortgages work, Bill, right? Based on the age of the youngest borrower, they get a percentage of the percent. They get a percentage of the equity in the home based on their age. So, for argument's sake, if you're 62, you're going to be somewhere around 35% loan to value, and if you're 92, you'd be up around 60 to 65% loan to value. But the idea is, and you mentioned it before, instead of a homeowner, right? Here's the scenario. Somebody has a home, it's too big, it's too expensive, they can't handle the stairs, they can't handle the landscaping, they can't pay the taxes, insurance, they can't handle the in-ground pool anymore. Just too big. But they can't afford to move. The other part of it is they can't afford to give up all the equity in that home when they sell it to purchase the next home because they need that money to live off in retirement. Most seniors today, homeowners today, 70% of their net worth is tied up in the equities of their home, and they need that money to live.
Right.
So the idea of the reverse mortgage for purchase, number one, eliminate that principal and interest payment. Number two, they can keep 40 or 60% of the proceeds from the home they just sold in the bank.
Right.
And then we would finance the difference with the reverse mortgage. And now they can live in that home without the obligation of a principal and interest payment.
So just to give, put some numbers to it, personally, I was looking to buy new personal residence. I live in California, in Florida. and how much cash do I have if I want to pay cash for the property? So because I don't want a mortgage when I move. I'm 66. My wife's a little older. I'm making good money now, but I want to plan for my down. So I look at some condos, and for cash, I have maybe $500,000. If I don't liquidate stuff, I could just write a check and buy a house for $500,000. But if I look at properties at $800,000, I can get a $300,000 reverse mortgage, which means I can buy a nicer property. I'm not paying any money on the reverse mortgage loan. And my property that's appreciating is an $800,000 house instead of a $500,000 house. So while there is interest being paid on that mortgage, I'm earning appreciation on a bigger, theoretically nicer property as well. So to me, it was like, well, that's like a no-lose. Why wouldn't everybody buying a house for cash not either buy more, depending on how much that is, or buy for the same amount if you don't need it more, and keep the cash in the bank and find a way to. So what is the interest rate? The mortgages today, the reverse mortgages for purchase, there's fixed and adjustable.
Yep.
What's the range of the fixed rates today? In the sevens of some sort?
Yeah, they're probably a little higher than that. But I want to go back to what you just mentioned before about increasing your purchase power, right? Mm-hmm. I had a client here. They sold their home here in Long Island. It was about a 3,000 square foot home. They sold it for, I don't know, $600,000-$700,000. And they went further out east and purchased a home in a golf community, gated community, clubhouse, pool, overlooking the 10th hole of the golf course. And that house had to be a $1 million purchase and a 4,500 square foot home. And the premise behind that is he purchased a much nicer house, than he thought he could ever afford. He put down the same amount of money if he was going to pay cash on, for example, that $500,000 house. So he put down $500,000. We financed $500,000, and now he's living in a golf community without the obligation of a principal and interest payment, similar to what you had just discussed in Florida. Getting back to the interest rates, So the adjustable rates today, listen, they vary, but the adjustable rate is somewhere between 6.5% and 7%, right? And the fixed rates today are probably somewhere in the mid to low 9s.
Okay, so that rate sounds, just as a real estate agent doing home loans today, buyers are in the 6.5 to 7 range. 9 sounds high, but you're also getting a different risk profile of loan. The adjustables being the 7s, and I think to remind people, you're only paying interest on the portion of the loan. So, like, to use my scenario, the extra $300,000 I'm buying is also appreciating by, on average, 4% per year. So I'm paying 7. I'm getting 4 back. It's almost covering half of that equity back by the appreciation of the property.
Yeah. So I just wanted to go over a quick scenario with you. I was on a phone call yesterday with a client. They are selling, or she is selling her $750,000 home. She has a $330,000 mortgage on that property. So she's probably paying about $2,000 a month in principal and interest. She's going to when she sells that home, she'll walk out of there, Bill, with roughly, I believe, about $350,000. And she's purchasing another home for, I'm checking my notes here. I think it was she purchased a home for $300,000. She has to put down $150,000. We're financing the other $150,000. So what that means now is she's moving into a home. She's right sizing. She'll no longer have a principal and interest payment. And from the sale of her previous home, she's still going to keep about $150,000 or close to $200,000 in the bank for her to use in retirement.
Wow. And so that's a tremendous tool. And the way I look at that is almost reminding me, I was planning on, I don't know, my fantasy is to move to Florida. I met my wife in Florida, got married there, but we have my daughter and 2 grandkids 5 blocks from our house. So unless I want to get divorced, which would then take my down payment money away.
Listen, divorce is a whole other conversation, Bill. We can have that another day.
Unless I'm going to do that, I'm not moving to Florida. But I still fantasize. I check prices all the time in Boca Raton and Surfside, where I like to move. And when we've talked about with our kids, and who knows what the future looks like. But like I said, I can't quite buy for cash yet, given I have assets that are producing income for me. But at some point we'll liquidate them. But I'm thinking if I could keep them, that'd be great. But really, when I noticed, well, to be honest, I don't need to buy a $500,000 house. I can buy an $800,000 because of the mortgage. That buying power, it created for me. Hey, that we're not even looking to spend that much. We're looking now, $600,000 or $700,000 is fine. I don't need an $800,000 house. So it created more buying power. Now, as a real estate agent, these are things that we need to get involved with. And so either as an agent, we need to learn this material cold and or have a relationship with you, Tim Kennedy, to help teach us or send our customers there to get them interested in the opportunities of extending your buying power and making a buyer where one doesn't exist without that because of the opportunities.
So it's challenging because everybody still has these misconceptions and wrong information about reverse mortgages. So when we have these conversations with realtors, we do realtor lunch and learns all over the country. And initially, they're very negative against it and they're uncomfortable about it, especially approaching that conversation with their clients, with their buyers or sellers. But the idea is people have to understand that, a reverse mortgage today, the home equity conversion mortgage, right? Keep in mind, it's managed by HUD. It's insured by FHA. There's probably a dozen different government agencies overseeing this product because the seniors today are a protected class. So this is it's probably the safest mortgage product out there. Okay. And we don't discuss it enough. And especially with the realtors, they have to understand and learn a little. They don't have to, listen, we're the pros, right? They don't have to know it in detail, but they should know the basics, right? Number one, nobody's giving up home ownership. The homeowner is still going to remain on title of the house. It's their home. They can renovate the home. They can fix up the home. Their only requirement is they live in that home as their primary residence. They pay their taxes and insurance, and they maintain the property. And if we can get that message out to the realtors, and the idea at the end of the day, if we do this right, and we coordinate it correctly with their other, assets and liquid assets and money in the bank, at the end of the day, that homeowner could leave a bigger legacy to their children if we coordinate this the correct way.
Right. So it sounds like this is a tool. And again, this tool isn't for everybody. It's like any tool in the toolbox. It's good for certain people. It's not good for certain people. But I think the key is to really learn how to use it. Now, are you able to give particular scenarios if somebody calls you up and says, hey, I'm looking to buy a house for cash for this much? Can you have the ability to come back and say, well, you can do that, or you can buy this much more with a reverse mortgage you have to pay on. And yes, it's equity, it's being charged against your property, but your equity is growing as well. Do you have the ability to give people that kind of immediate answer?
Oh, 100%. So we have the software and the graphs and the charts, and we can go through a presentation like that. You have to understand, Bill, when we talk about retirement income planning, we talk about three different buckets. The number one bucket is our income. What we're doing right now, you and I, we're working, we're earning an income, we're putting money away to Social Security, we're putting money away into our retirement accounts. But one day that's going to stop because one day we will retire. And then we focus more on what we call bucket number two, the money we've saved all these years while we're accumulating wealth. And the retirement accounts and the 401ks and whatever else we may have. And then what we like to discuss a lot about is bucket number three, the home equity. And the reason we talk about home equity is because homeowners over the age of 62 today are carrying over $17 trillion in home equity. And why aren't we discussing that when we're talking about retirement income planning? So the idea is, let's leave bucket two alone, right? Instead of taking $500,000 out of bucket two and purchasing a home, let's leave as much money as we possibly can in bucket number two. And let's use the equity in the home. Let's use that housing wealth. And if we do this correctly, you have to remember, Every time somebody takes money out of bucket number two, what does it do? You got to pay taxes on it.
Right.
Number three, it may bump them into a higher tax bracket.
Right.
The idea is, let's find another bucket of money that's tax free. Let's talk about housing wealth. Let's talk about home equity.
Now, the reverse mortgage product is only available for primary residences.
Primary residence, yes, sir.
So if somebody owns a house, like in my case, I live in Los Angeles, I'm moving to Florida, I might want to convert my current residence into a rental. But there's a lot of equity there, right? So that's a whole nother way to look at that. Can one move? What are the restrictions as far as calling something a primary residence versus a rental or second residence?
Well, primary residence has to be the residence where you live. Are you going to live there more than 6 months in a day? And you have every intention of living there,
Right.
right? So you can't have your primary residence and have somebody paying rent, because that means you don't live there. Somebody else lives there. So
Right.
the idea, it has to be your primary residence. You're not restricted from traveling or vacating that home. I have a lot of clients here in the Northeast, and they go to Florida, 4, 5, 6 months with the reverse mortgage. They can do that because
Right.
they have every intention of coming home to their New York property. That's their primary residence.
Well, I'm sure like New Yorkers, I'm also looking at the possibility of maybe moving my wife into a smaller place here in Los Angeles as a second residence and move my primary residence for business reasons to Florida.
Sure.
I have a real tax advantage. If I can move my business to Florida, I can save quite a bit in taxes. That alone probably pays for the mortgage, probably pays for the house. I mean, at some
Right.
point, but we'll see how that works out.
Yeah.
Okay, so it
Yeah.
sounds like there's a lot of possibilities and strategies. The way I describe this is complicated doesn't necessarily mean bad. Complicated means there's a lot of possibilities, but there's only one possibility that matters to you as a customer or to your particular customer that you're talking to. And that's why you want to talk to experts. And Tim's not just an expert in reverse mortgages, but in particular, he does quite a bit in the purchase side, which is different. Now, Tim, I know one of the challenges, I'm a listing agent primarily. I'm a real estate broker here in LA, primarily in listings. And, people call me all the time with offers, and they have, different exotic plans on how they want to buy the property. And 9 out of 10 times I think that's just not going to work. To be honest with you, somebody call, and I've had phone calls from reverse mortgage buyers. And one thing I know is this: if I talk to 100 lenders in LA, 99% will say they can do a reverse mortgage, but about one or two have done one the last 2 years. So imagine I'm a listing agent and you're going to call me, or your buyer's going to call me. Are you going to help? What do you do to help them get their offer accepted in a competitive market? If somebody's going to pay a good price, there's some competition. Do you reach out to the listing agents? Are you able to distinguish yourself from just, hey, I'm just some hack loan officer saying I'm going to do reverse, versus, I know you're an expert. I know you work for a fine company. Talk to me about what you can do to help get that offer accepted.
Yeah, so it's interesting you say that, because that's exactly how I got into the reverse mortgage business, Bill. About 15 years ago, somebody called me up and said, "Tim, do you do reverse mortgages?" I said, "Of course I do reverse mortgages. Who doesn't do reverse mortgages?" And the truth of the matter is, I didn't know how to spell reverse. And I fudged my way through it. I figured it out, and I helped this client stay in their home and age in place. And I said to myself, "Tim, you got to figure this out." And at that point in time, I did the research. I did my homework. I went to Barnes and Nobles. I bought a couple of books, and I educated myself in the idea of the reverse mortgage. And then I took it a step further, and I figured out how the reverse for purchase worked. And then in 2018, I qualified for my certified reverse mortgage professional designation from the National Reverse Mortgage Lenders Association. In the past 2 years now, I qualify for my retirement mortgage professional designation. And yes, when somebody calls me up and says, "Tim, I'm over the age of 62. I'm looking at reverse mortgages. I'm looking to purchase a home," I will reach out to the listing agent and the buyer's agent, explain to them, my expertise. And as a certified reverse mortgage professional, I am one of maybe 200 mortgage loan originators in the country with that designation. Keep in mind, there's probably well over 100,000 mortgage loan originators out there, and I am one of 200 with that designation.
Well, and if you just call the phone number on the TV commercial with a fancy actor, they're not going to call the listing agent. And what I tell my customer is, then you can't get the house. Because if you, in a competitive environment on a good listing with a good listing agent, you need to work with your real estate agent and your loan officer. You need to work together to tell the listing agent, hey, we can close on your deal. Nobody wants to just get the offer. They want to know it's going to close. And so that's why there's a distinction between, to me, somebody calls me from some company, and I get phone calls from Rocket Mortgage and this company, that company. But it's some call center, they don't really know what they're doing. And if they don't do a good job, they disappear in the ether. Versus Tim, I know you're with Movement, fine company. You guys are very purchase focused. Your reputation with real estate agents is very critical. That holds a lot of weight. Now you mentioned something, if I can go back a little bit, I'm sorry. Certified reverse mortgage professional, we've talked on this podcast before. In my experience in real estate, it's the only designation worth anything in terms of the name. Now, there are other programs, like I'm a certified probate expert, and it was very good training and very good information, but just because you get it doesn't mean you know how to do business regularly. In the CRMP, you actually have to do some amount of production and time on task and continuing education. But you also mentioned something else, retirement mortgage professional designation. Tell me about that. That was different.
Yeah, so that's a designation that Movement Mortgage and Dan Holquist perfected, where we have to go through a significant amount of hours of training and take an exam and qualify for that designation. We also have to maintain, even with the CRMP, we have to maintain continuing education. We have to take an ethics course, and we need to maintain that license. So that's very important. But the idea of the RMP is that's all I do. So I am not even in my contract. I can't even do forward loans or traditional FHA conventional loans. I have to refer those out to other loan officers in Movement Mortgage. I strictly do 24/7 reverse mortgages, whether it's a refinance or a purchase. And something I want to say about, and like you mentioned before, yeah, you get these phone calls all the time. Movement Mortgage, believe it or not, is the 7th largest independent mortgage banker in the country. And the Movement Mortgage Reverse Division just recently was voted #1 for customer service. Because when somebody calls, whether it's me or the other RMPs at Movement Mortgage, this is all we do. We are not a phone room like the other companies out there where you're calling a phone room, right, and you're not too sure what they know or don't know about reverse mortgages. This is all we do.
And as I said, I've known Movement Mortgage for a long time. I've worked with the company for about 6 years. I'm intimately worked with management and on the forward side with the regular mortgages and the purchase side. And I know of all the companies I've worked with, unlike Wells Fargo, Bank of America, and other lenders who take the easy road, when rates are good, they do refinances. When they're not good, they disappear. Movement has always been committed to the real estate community as a partner and working with us, helping us get our deals closed. And so for the most part, they're well trained and they're cut above. But at Movement, they went a step further, which is only certain loan officers like you, a small percentage, are allowed to do reverse mortgages. And so when somebody calls and says they're going to do it, they're really going to have to hand it off to you. You're the one that the realtor is going to really interact with. And I think that's the right path for companies. Now, individual loan officers, again, if you're experienced, you want to be able to do both. And that's a personal decision. But at a company level, the reason why the reverse mortgage has a bad reputation, the stink on the product, is from the companies let anybody do it.
Yeah.
Because not everybody who does it well. Half the people, by definition, half are below average. So, that's right. That's just the way the math works on that one. And you guys, by definition, are the top 10% of your company as far as doing reverse, because they only let, I think, 10% or whatever or less company-wide do them. And that, to me, is a real stamp of approval on Movement's part, that they are wanting to create something that protects the reputation of the product and the company. And I think that's really lacking in the industry overall.
Well, it's important, Bill, that when you're discussing reverse mortgages, that you have somebody that knows how to do them. Reason being is it's your reputation on the line. When you call me or one of my other retirement mortgage professionals, now you are, you have another real estate agent on the other side of this transaction. You have a buyer and a seller. And if you call the wrong person to do that loan, it's a reflection, it's your reputation, right? So you have to make sure when you make that phone call, you're making the phone call to the right person.
Exactly. Well, and one of the right people to talk to, one of the right companies is Movement Mortgage. I've had great experience with one of the right people is Tim Kennedy. Tim is in New York, if you can't tell by the accent, but services, I think, the Eastern Seaboard, and as well can refer you to people across the country to help through the Movement Network to help get those loans done. His information's on our website. Website timtalksreverse.com. Actually, it should be Tim Talks Reverse with a New York accent.com. Should be the proper website. And I can tease. My son-in-law is from Long Island, so I'm allowed to tease New York stuff. And phone number 516-729-6040. Tim, thanks so much for being on the Reverse Mortgage Podcast. I really appreciate your commitment to the industry and your willingness to share and your time today. Thank you so much.
Hey, man. Hey, thank you. And if I could have one more minute just about Movement Mortgage for a second.
Yeah.
We are an impact lender. To qualify as an impact lender, we have to donate 10% of our profits back to the communities we serve. Bill, would you believe Movement Mortgage donates back almost 50% of our profits back to the communities we serve? And when I found that out, I was just mesmerized, and one of the motivating factors of why I joined Movement Mortgage.
I do know about that from the very beginning. I have to say that I think every company has copied this concept on a small scale, but Movement Mortgage lives this, and on the website it has they've given over $377 million to date through that program. And I'm going to tell anybody who knows Movement, and Movement originator, they live this. Every company, including mine, EXP, and Keller Williams, they all have some sort of a donation process, which is nice, and I'm not putting that down, but it's not 40 or 50%. That's what Movement does.
Yeah.
It's just an amazing,
phenomenal, yes,
a phenomenal company, and your founder Casey is just an amazing. Casey Carford is just an amazing person. Has really created something of tremendous value. So thanks for pointing that out, Tim. I appreciate that. Again, Tim Kennedy with Movement Mortgage, and his contact information will be in the description. I appreciate your time today. Thank you so much.
Hey, Bill, remember, a reverse mortgage in 4 simple words. It's just a mortgage. Thank you. I appreciate it.
My pleasure. Thank you so much. And reminder, this is the Reverse Mortgage Podcast. We have a Facebook group if you want to continue the conversation or have referrals. We do this every week. We interview typically top producers in the business, a few management. I actually have some of my own content that I add on this as well. But I'd love to have your thoughts, comments, questions. Subscribe if you like it. Don't subscribe if you don't, but if you like, we'd love to have you subscribe. But also in the comments, send what questions, comments, what you'd like to see us cover in the future. I would appreciate it. I'm at Bill Gross Probate on social media. And as always, make today your best day ever.